Welcome to another video, viewers, by reitspro.com. Today we have the topic NHAI InvIT. So NHAI has filed for a 1500 crore NCD issue for retail investors, and this is what we will talk about today. A lot of queries that I have are about what is it. So that's what we will do today here. And please note that the video is for infotainment purpose only. It is not a comprehensive analysis, and we offer no investment advice whatsoever. Please visit our website reitspro.com for more information about what InvITs are if you are unfamiliar with this. So what is this investment opportunity, and this is what we are going to discuss. So the highways InvIT to be opened for retail investors, says Nitin Gadkari. So this is what the minister said in August 22, and also that we will be listing an infrastructure investments trust in the stock market, and this is what the statement was in Business Standard News. Now next, in October 22, there was an article in the same newspaper which said that no immediate plan to get retail investors to NHAI InvIT. This is at the time when the NCD was being issued at a 25% reservation. So the first question is that is it really an InvIT investment? So the first point here is that it said that there is no immediate plan to allow retail investment into InvIT's equity. So NHAI, as the InvIT sponsor, retains 15% of the unit holding, and the trust is barely year-old. It's a private trust. It is a private trust, not a public listed trust like the IRB InvIT, PG InvIT, or the Indigrid InvIT. And deliberations with SEBI to make it a public listed InvIT. And the NHI InvIT is issuing bonds to encourage retail investors. These are the excerpts from this article. So the first point is that it is an NCD issue open to retail public. Retail public won't own the units, InvIT units, when this happens. So what does this mean? For this, we need to look at the structure of an InvIT. The structure of an InvIT is like this. So there is an InvIT in between, there is a unit, there are sponsors, and there are unit holders, other unit holders. This is where you stand when you invest in this instrument as on date in October 2022. This is a typical structure of an InvIT. So an InvIT would have lenders as well as unit holders and trustees and managers, and hold infrastructure assets mostly through SPVs. This is the general structure, and you are here as a lender. That's what the issue is all about. So the difference compared to investors of Indigrid or IRB, which are existing public InvITs, are these. Firstly, there are no incremental returns over time. These are fixed returns offered by NHAI on their NCDs. So in case of Indigrid, for example, the returns, the annual payouts have risen from 12 rupees per unit to about 13.2 rupees per unit. Secondly, there is no risk of principal depreciating in the markets unless there are interest rate fluctuations depending on that, which any debt instrument can have. So in case of IRB, there was a lot of downswing in the unit price. So this is something that would not happen because of market forces, only if there are interest risks there in case of NHAI InvIT. Third, the tax benefits would not be there for which are available to InvITs. Say for IRB, 40% of the incomes were tax free last time. So this is an issue of NCDs, and it's a comparatively secure instrument with locked returns. That's what it is, unlike say an Indigrid and IRB, which are traded as regular stocks on the exchange. So this is also proposed to be listed, the current one which we are talking about, and this we will talk about just in a moment. So basically this is an NCD, and the issue price is this much, and the minimum application is this much. It's rated, credit rated, and the interest payouts are semi-annual. This is the source here. And what are these? These are called STRRPs, which are separate trading of registered principal parts payment. And the offer is as here, and you can actually see all these details on this website of ICICI Direct. These are basically 10,000 rupees is what an initial investor will have to give, and 10 NCDs or 30 STRPPs would be given, and 1,000 is split into 300, 300 and 400. So we'll talk about this a little in detail in a while. And the second point is that it is not guaranteed by the GOI. A lot of people probably have that misconception. Why? Because you are in a structure like this where the lender is there, which is the NCDs, the NHI is there, which is one of the sponsors, and the institutions are the others who hold units. So in fact, yes, one can say it is far safer because the government entity is involved, but as such the InvIT it's more like a corporate bond than something that is guaranteed by the government. But of course the risk factor one could say that the risk factor is less for two reasons. Firstly, the NHI is involved, and the second part is that the bonds are rated AAA. So this is what and why. What is the security? So just to emphasize the point that you are not part of the owners, you are basically given a security, which are these. So it's a charge on the assets, immovable assets and so on. And then it's a bundled offer for the initial investors. So what does that mean? So before that, you can contact us for trainings or for one-to-one sessions through our website, and you can look at these other two offerings also, and you just have to visit reitspro.com and even sign up or connect with us on WhatsApp or Telegram. So okay, we were talking about the bundled offer. What is the bundled offer for initial investors? So these STRRPs are a bundle of three things. So when you spend 10,000 rupees, each 1,000 rupees represents part A, part B, part C. This should be actually C. So 300, 300, 400 and 7.9% payable semi-annually, which translates to about a little over 8% return. And the tenors are different: 13 years, 18 years and 25 years. So when you take 1,000 rupees of one bundle, you get different tenors. So that's why it's a bundled offer. And the listing and trading, so subsequent to listing, the trading lot shall be of one STRPP forming part of any NCD bearing individual ISIN will be traded by NCD holders. That means one STRPP would be traded individually, so you can separate them out. And STRPPs are given as below. So minimum application 10,000, 10 of A, B and C each, and that means 30 total, and 10 NCDs are there. So basically 10, 10, 10 of each, and one NCD comprises of 10, 10, 10 of each, and one in multiples of 1,000 rupees. 75% of the base issue size is what the minimum subscription is, and NCDs are proposed to be listed on BSE and NSE. So you need to take all three. There are different tenors, and option of my type. What is the kind of tenor that you want? The time period for which you want to invest is dependent on the listing only. So what would you get after listing is something that we do not know as of now. What would be the liquidity? And this is every investor's own call whether they would like to do this, but it's basically a debt instrument. That's what my video is all about, and to explain to the viewers what the recent offering of the NHAI InvIT is. Thank you so much. Thank you.